in there, he specifically was like, hey, look, the way you make money is when the price goes up. And the price goes up or down if you're going short, and the price goes up in a trend. So follow the trend and it makes your life so much simpler. And I'm like, whoa, thank you for just distilling it down to the basics.
This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance, Christopher Ewell. Today's episode is produced in partnership with FinClub.ai. Trade with confidence and take the guesswork out of trading with FinClub's artificial intelligence platform. Now you can get access to the best AI trading platform on the market for as little as $19 per month. That's almost the price of Netflix. So head on over to FinClub.ai to start your 2-week free trial right now. Remember, that's at FinClub.ai. Hey, make sure you subscribe and hit the bell so you'll be notified every time we give you more tools, tips, and tricks to help you trade faster and trade smarter every single week.
Hey there, traders. Welcome back to today's How to Trade Stocks and Options podcast. Today we have a special guest online, JC Parez. Now, JC, he's a man after my own heart. He's the founder and head trader over there at All Star Charts, and also he is a podcast host as well for Technical Analysis Radio with JC Parez. JC, I'm really excited to have you on today. It sounds like you and I have a lot that we can chat on.
Yeah, no, thanks for having me. I appreciate it. Happy to talk charts and markets on a Friday morning anytime you'd like.
You know what? Charts and markets right now are pretty interesting, right? So with the virus going on out there, we've seen weakness, in the first half of the year. We've seen strength, and now we're seeing like exhaustion and just kind of like things rolling over. What's going on, man? What's the deal out there? What can somebody who's new to charts just pick up and say, oh, here's a great place to start?
Well, I think that there's a misconception about technical analysis and an complication, when all we're really doing is identifying trends. Mm-hmm. And that's why technical analysis works, because markets trend, right? Markets, we know for a fact market returns don't fall under normal distribution. Like there are hot streaks, like when a three-point shooter is hot, feed him the ball. When a pitcher is just dominating and striking out the side left and right, you don't take him out to put in a middle reliever so that a lefty's facing a righty or whatever nonsense the manager's coming up with in his head, because these managers aren't pitchers. That's another story. My point is, like, an object in motion tends to stay in motion, right? Isaac Newton, and the market's the same way. You can give a chart to a 4-year-old and say, which way is this one going? She's going to say, Daddy, it's going up, or Daddy, is going down, right? But the smartest and wealthiest investors just skip that step. They want to buy a stock. They're like, all right, who's the CEO? What's their, what's the multiple? What's their book value? Whatever it is that they're doing. And they're just completely skipping that very simple step of which way is the stock going? Like just, it'll take you half a second to be like, oh, it's going up. I guess the rest of the market agrees with me. Or, man, this thing looks terrible. So do I know something that the market doesn't? Like, right? So to me, identifying trends is really where it all begins. And people are, JC, what's your favorite technical indicator? Well, it's price is my favorite technical indicator. It's the most valuable. And then anything else after that, whatever it is, maybe it's volume for you or momentum or relative strength, whatever it is you're looking at, something you created in your basement, that's supposed to be this like signal or whatever. All of that stuff is a far, 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 far second from that first thing, price. And if I can relay any message, it's that.
Dude, that makes so much sense. And I got to tell you, I learned how to trade from people who I don't understand why, but they were convinced trends were not a thing. And I know you're like, what? Yeah, I saw it.
Like, are they blind or like they're closing their eyes?
And so like when the price was going up, they'd be like, dude, you got to sell calls, right? Or when the price is going down, dude, you got to sell puts. And I'm like, okay. But then I reached a point where I was losing like crazy. And I'm like, there's something broken with this system. I can't keep throwing money away like this. And so I really took a step back and I started reading all these books and learning from all these different people. And one of those in particular was Trend Following by Michael Covell. And in there, he specifically was like, hey, look, the way you make money is when the price goes up. and the price goes up or down if you're going short, and the price goes up in a trend. So follow the trend, and it makes your life so much simpler. And I'm like, whoa, thank you for just distilling it down to the basics. That's what I needed, right? I got so lost in the weeds, and honestly, I was listening to the wrong people. And that's why I really love having different perspectives and having them come on the show just like this. So JC, give us a little background. I think I skipped the part where you tell us about who you are and what you do, so I apologize for that. But give us a little background about who you are, where you came from, what you do, and how you got to this point.
Yeah, Chris. I mean, listen, nobody cares about me. They want to know about the charts. They want to know about technical analysis. Yeah, let's start at the beginning. It was a warm summer day, and for me, I grew up in Miami. My family came from Cuba in the early 1960s. I was the first one born in the country, so I had a lot of opportunities that, I wouldn't have had otherwise had my grandparents and parents not made the sacrifices that they did way back in the day. So, I was a baseball player. If you can imagine a Cuban baseball player in Miami, I know that sounds wild to you, but I fit that description perfectly. I played ball my whole life. I got a good opportunity to play Division I. At Fairfield University in Connecticut, which is conveniently located right in the hedge fund capital of the world, Fairfield County, where Greenwich, Connecticut is. So that's where I went to school. And my interview for my internship at Merrill Lynch was like a joke, because it was kind of like a revolving door of Fairfield interns every summer. So my quote unquote interview was more of like an introduction. Oh yeah, so you're on the baseball team, so-and-so? Oh yeah, I played golf with his father. Oh, so-and-so? Oh yeah, they were our intern last summer. So it was more of like, hey, nice to meet you, when can you start sort of thing. So I was like, this is fantastic. The next thing I know, I'm 21 years old, living in New York City as an intern after my junior year of college, working for Merrill. It was quite obvious I hated Merrill Lynch and everything that it stood for. And I tell this to all my interns, and I tell this to people that are interning, you don't love the company that you work for, right? If you hate it, that sucks. But you don't have to, it doesn't have to be your career path. But if it can at least point you in the right direction, or open your eyes to something you didn't know before, that's the purpose. It's not like you have to go intern at Merrill and then work there forever. I mean, it doesn't even exist anymore. So you can, well-deserved, right? They didn't deserve to exist anymore. But I knew I didn't want to work for them. I wanted to work for smarter, Freudian slip, smaller firms for sure, and get my hands dirty and start trading instead of just being a number at a big firm. So it really opened my eyes to that. And kudos to that summer and my bosses over at Merrill at the time. I really fell in love with the markets. I mean, it was love at first sight. I was less interested in British literature than I was in mathematics and geometry. Right. So, that sort of thing just kind of fit my personality and my profile, just who I was. And I always think that athletes have a huge advantage in the business world overall, but certainly in the market with respects to discipline, mental toughness. These are things that athletes thrive in, or should anyway, the good ones do, because they've had to learn tough lessons the hard way. They've had to run sprints in the snow at 6 o'clock in the morning, hungover on a Sunday morning. No matter how bad my day is, Chris, and I have bad days and good days just like anybody else, but no matter how bad my day is, it's not going to be worse than those 6 a.m. morning sprints in the snow on a Sunday when you just got home a couple hours prior. Nothing I do is going to be as bad as that. So I think, and you talk to other former athletes and they have other funny, similar stories. So I think that really helps. And then, so I hit that fork in the road early on. And as Yogi Berra said, when you hit the fork on the road, you take it. So it was like, all right, so do I learn fundamental analysis and learn about companies and study for my CFA? And this is, I'm like 23, 24 years old. Or do I study for my CMT and learn technical analysis and learn about stocks and trading? And at the time, it seemed quite obvious. I couldn't care less. Statements and balance sheets and fundamentals of companies that don't even have fundamentals. Like, these people are trying to put multiples on companies with no earnings. Like, what are you doing, bro? So anyway, I didn't know this at the time. It just seemed obvious, study stocks and study technical analysis. So I got my CMT. Little did I know then how important that decision would ultimately be and how it would impact my career and really my life. And the countries it would take me to all over the world and the people that I would meet. I mean, wow, what a great decision that was. And so I started a blog in 2010, 2011. And 10 years later, that blog is probably the most widely followed technical analysis research of all time.
Wow, that's really cool. I totally agree with you as far as like the paths that you go across lead you to certain places, right? I had similar experiences. I started trading like in 2009, and I was doing leveraged ETFs, and I wasn't going anywhere with it, right? It would just basically
Shocking.
break even. Yeah. And I didn't lose all the account at that point. I lost it twice since then. But it wasn't going anywhere, and I just kind of shelved it for a while. And then when I was in a different job, I worked in corporate finance, and they were talking about Deutsche Bank one day, and they were like, it was a conversation I overheard between two colleagues, and they were saying, "Hey, if you think Deutsche, go out and buy some puts." And I was like, "What did you just say?" And I was like, I know I've heard the word puts, but I just cannot remember at all what it was. So I was one of those nerds that kept all of my textbooks from college. And like I said, I worked in corporate finance. And so I had all the textbooks on my desk right there. And I pull out the one that talks about, I don't even remember. It was a finance textbook of some kind. But, it's one of those textbooks from college where it was like 900 pages, right? You sit it on a table and the whole earth shakes, right?
Yeah.
And on that book, there were 2 tabs in it. And one of them was for bonds and the other one was for options. And I'm like, what are the chances? Like me from 10 years ago or whatever it was would know for that, right? And I flipped to that page and it talks about how puts grow in value as the stock price goes down. And I'm like, mind blown. I was like, a whole new world that I should have remembered had left my brain and then just came back all at once. And I wouldn't have had that experience, which actually led to me starting my company and doing my trading and starting the podcast and things like that. That led to like this exact moment. So you're totally right. When you have those forks in the road, you never know when the opportunity will come across like that.
Yeah.
So that's really cool that you're sharing that. So you, at what point did you leave Merrill Lynch, right? Was it
was just an internship. It was just it was just that summer.
Gotcha.
Yeah.
So what did you do at that point? You started out on your own, or you started working at smaller firms like you were looking for?
Yep. So I just got my hands dirty. I worked at a firm who's no longer West Rock, and basically did everything. Helped put together different deals at different firms. Trading, we put together IPOs, took a few companies public. We took this this juice company public. I remember that somehow worked out great. Some hippie guy in a basement, the stock went up like 10 times. I forgot the name of it. It was like a ginger beer or something like that. I forgot off the top of my head. So we just did it really opened my eyes. But the one common denominator, like we were buying shares of Twitter and Facebook way before their IPO, really, really cheap valuations, like, secretaries and chefs trying to get rid of their shares and things like that. And, we'd bring it to private investors. Like, it was really, really cool. But the real common denominator that whole time was technical analysis. I mean, that was really my bread and butter. So I went on my own, started a hedge fund in 2012. As you can imagine, being a general partner, owning a general partnership at a hedge fund is very costly, very expensive. So here we are, just, people would be like, I had a blog at the time and I was on TV every day, and people were like, "Oh, why aren't you selling your research?" And I was like, "Oh, I'll just raise $1 billion. And they're like, "All right, bro, good luck with that." And I was like, "Yeah, I'm going to do it." And then I'm having dinner with billionaires and billionaire hedge fund managers, and I'm talking with them, and I'm like, "These are the struggles." And they're like, "Yeah, kid, that's the deal." And I'm like, "So you were dealing with the same bullshit and the same struggle?" And they're like, "Yep, that's just a rite of passage. Keep doing what you're doing." I'm like, "So I'm not doing anything wrong. Like, all this sucks. Like, this is the right way." They're like, "Yep." I'm like, "All right." So like, I don't want to say I'm having dinner with billionaires all the time. There's 2 of them. But, they were basically reinforcing that I was doing the right things, even though it was like quite the struggle. So I was like, all right, I'm doing the right things, but I'm not making any money. Investors are making money. Attorneys are making a fortune. The accountants and the fund admins are making a killing. Everybody's winning but JC. Mm-hmm. So I'm like, this doesn't make any sense at all. So I had some friends, still do, in Detroit, a company called Benzinga. And in 2014 or 2013, they started it was like a back-end provider where anybody who wanted to sell research on a subscription basis, basically you send it to them and they'd go sell it for you and then cut you a check. And they were like, JC, and they were just all drinking buddies of mine every time they were in New York, which seemed like all the time. they would just bring me up. My office was on 5th Avenue and 44th Street, like where there are, I don't know, 1,000 bars within a 2-block radius. So they were always in my neighborhood. Oh, meet us for a beer, meet us for a drink. All right, no problem. So they're always like busting my chops. Like, JC, give us something to sell. Look at this guy with his weed newsletter who's making like $100,000 a month and this and that. And I was like, I don't know anything about weed newsletters, but like I'm doing all of this homework for the hedge fund. I'm the only one that looks at it. So like, if you guys sell it and make a few bucks for me, great. That'll help pay for the bills so that JC makes a little money too instead of everybody else around me. And if you don't sell any, well, I still have to do the homework anyway. So, I have nothing to lose. And then slowly but surely, like those checks turned into, 7, 10, 15, 20,000 a month. I was like, okay, this could be a real business. So that's when I was like, why don't I get out of town for a little bit? Moved to California with my girlfriend at the time, now my wife and mother of my baby girl. But at the time, she was my girlfriend. I was like, let's go. We agreed, let's get the hell out of here, go to California for a couple of years. We lived in Sonoma, and then we'll move back to New York, relaunch the fund, but now we'll have a real business behind the research instead of, some half-ass unfinished product, which is what it was at the time. And that 2-year plan turned into 5. We're now back on the East Coast. We still haven't relaunched the fund yet, and because the research has just blown up to levels I never imagined were possible. We brought everything in-house. It's our own firm. We're not outsourcing anything. We brought in more analysts, more experts. We've got guys building scripts in Moscow. This is like a real company now. Like this is like, it's like really cool. We just hired our 16th employee. When I get off with you, I'm interviewing employees 17 and 18, which they already have the job and they don't know it yet. So we're going to be 20 employees soon. And it's really been, just such a blessing. The whole thing between the blog and the podcast and the YouTube videos and, all the experience that I had on all the TV networks. I used to host my own show on CNBC. I was on Fox Business all the time, Bloomberg. Like I was really one of these media whores in like 2012, 13, 14, like in my late 20s, early 30s. I mean, I was on TV practically every day, which really taught me 2 things. Number one, you learn how the sausage is made. You know why it sucks so much, and nobody can watch. Today's financial television is unwatchable unless you're in a nursing home in a wheelchair and you just can't change the channel. You're the only ones watching this stuff, right? Like anybody young or with a brain can't sit there and listen to a bunch of white dudes in suits yelling at each other. Like, oh, come on. Like nobody can watch that. So it really, with all due respect,
Wait, what?
Yeah, right. Here we are. So it taught me that. It also taught me that I met a lot of people like in the green room. I'd just be hanging out in the green room waiting to go on TV, and there would be a billionaire just kind of hanging out in his like loafers and just kind of like, I'm like, oh, wow, that's David Tepper. That's pretty cool. That guy's my hero, and he's sitting in front of me. I should probably say hi. So, I met a lot of people, backstage and stuff like that, which was really cool. Same thing with like conferences that I would get invited to also. But then it also taught me that it didn't help my business, right? People think like, oh, if you're on TV, then, oh, that's great for business, good marketing. All it really is like you could tell your mom, hey, mom, I'm on TV. Like that's really the extent of the benefits of that, unless they're paying you a lot of money, which usually they're not. In some cases, people have like ridiculous contracts. Like if you only knew the contracts that some of these contributors had, they don't do what they did before, but a lot of them are still grandfathered in. The point is, nobody's watching. Like you could see the traffic. Like I wouldn't get a spike in traffic when I would host my own show or, be on this network or whatever it is. So it was really just a complete waste of time. So number one, I have to go out of my way in the middle of the afternoon to go on TV and then nobody's watching and there's no benefits. Like that doesn't make any sense to me. So when I was leaving to California, I was like, what are the pros? What are the cons? And, one of the cons I thought at the time was that I wasn't going to do at TV anymore, or rarely. I was on TV probably maybe once a month as opposed to 3-4 times a week, because I would go into San Francisco every now and then and do some stuff. But the truth is it was very eye-opening, all of those experiences. And I figured just do my own thing. We'll just do our own videos. We'll do our own podcasts. And, if you don't like it, you don't have to listen to it. But we're going to do what we want. I'm going to interview the people I want to talk to. I'm going to do YouTube videos about what I want to do videos about. And it became a very selfish endeavor where we're just trying to make ourselves laugh. If you don't think it's funny, that's okay. Other people do, apparently. And, that it's just been so awesome and so refreshing, to not have somebody looking over my shoulder or somebody telling me, yeah, JC, nobody cares about soybeans. Why don't you look at a chart of Apple again, right? So the whole experience not only has taught me the way the sausage is made, but has really taken me around the world and opened my eyes to that global marketplace. The world does not revolve around New York City. Well, now it definitely doesn't. But even before the virus, it did not. And people thought that the world revolved around Midtown Manhattan, and could have been further from the truth. And, the whole thing is, I've been to India a handful of times, Tokyo a bunch of times, Singapore twice, Hong Kong twice. I've spoken all over Europe, London, Amsterdam, Athens. Where else have I spoken? Definitely forgetting some people, and they're going to be like, JC, you didn't mention that you were here. Needless to say, throughout Europe, and again, when you're out there, how many people are you meeting and how many people are you interacting with? Now, all of a sudden, I'm in Amsterdam and I'm in a room with 20 traders in Amsterdam that I've never met. And in most cases, maybe only a few of them knew who I was then. Now they all do, and slowly but surely you keep doing that. Now you've got, I could pretty much go to any major city in the world, and I've got friends there that'll drop what they're doing and go meet me for beers or go to dinner or whatever. So it's really, really cool.
Man, what a great story. And to hear all of that, I didn't realize you had such an extensive media past like that. In fact, you might recognize this background that I have here was intentionally copied well, I shouldn't say copied. It was intentionally modeled to look like certain backgrounds on.
Inspired by.
It was inspired by. That's right. It was not a screen capture and copy. No, none of that. But yeah, I mean, honestly, that was my goal. Was to get on CNBC, like you're talking about there. That was what I was set out to do. In fact, I had met a few different people who had worked on CNBC, and a couple of them were like, "Hey, listen, nobody trades options," and I'm like, "Okay," but they were like, "Nobody trades options. What you talk about doesn't matter. You shouldn't even try and get on CNBC." And so I kind of took that to heart for a while, and then I got to thinking, like, I'll just do my own thing. So that's where the podcast kind of started. And so that was in December 2017, I think, or December 2018. Either way, it was in December of 2019. No, December 2018. By May 2019, it was in the top 10 in the iTunes investing category. It reached number 7. And I'm like, how in the world is this happening? It's just me talking about my own things, right? And just exactly like you were talking about, it's following your passion, talking about what you're passionate about. And if it happens to be soybeans instead of Apple, you have the permission to talk about whatever floats your boat today. And I think that's really cool to hear your story and to hear all of that went behind there. So at what point when you're making your own content here, is your podcast a video podcast too, like this one, or is it just audio?
We'll do videos and rip the audio and turn that into a podcast. We'll do some of that stuff. Originally, the podcast just started up as straight interviews. Like I would just call up my favorite technical analyst and we talk about the market. That's really how it started. And then it sort of evolved into a combination of that, right? I still do that, of course, and started bringing in, maybe regular series. So I have somebody named Phil Perlman. He's a doctor, he's a psychologist, and we talk about behavioral finance. We call it the money game. So it's kind of like a podcast within a podcast, if you will. So sort of like a running sort of segment, maybe once a month, where I bring in Phil and we just rap about something behavior-wise that we both find interesting. And again, very selfish endeavor. Some people sometimes are like, the hell are these clowns talking about? And that's okay, right? Like if you don't like what we have to say, or you don't understand it, or it doesn't mean anything to you, like that's cool, right? Like it's totally fine. It's not one of these situations where a network would call me like, all right, JC, you're scheduled to come on tomorrow. What do you want to talk about? And then I would be like, well, let's talk about treasury bonds. Let's talk about materials breaking out. Let's talk about soybeans. And let's talk about, yield curve. They're like, why don't you talk about Apple? Or
How
why
about
don't
Apple,
you pull up a chart of the
Tesla, and
S&P
Microsoft?
500?
Right.
It was like, why are you even asking me, right? Why are you even asking me? Like, you're asking me, like, you make it so nice, like, oh, what are you seeing out there, trader? And I tell you, and then you don't give a damn. So just tell me you want me to look at a chart of the S&P 500 and continue your boring, show, because it's the same, like, it was really, really eye-opening. And I'm not trying to pick on any one network or anything like that. Like, that's not what I'm trying to do here at all. In fact, I really appreciate all of the times that I had there. And I have a lot of friends that are hosts of a lot of these shows. In fact, the reason I do any of these shows to this day is because I'm friends with producers and the hosts of the shows. So I'm never going to say no to them, right? So they're great people for the most part. And so my entire experience in the media side, it was a great experience with the people, but learning how the sausage is made and seeing why it's so bad and unwatchable, that was the real lesson.
Interesting. Okay. So now you've got your company, you're doing well. It sounds like you were working with Bazinga. You've got your podcast going on. At what point did you start All-Star Charts?
So this was a blog in 2011.
So that was the blog. Okay.
Yeah, it was a Twitter handle in 2009. So I'm incredibly fortunate to have been literally at the genesis of what today is known as Fintwit, right? Mm-hmm. Like financial Twitter, financial social media, like that whole Fintwit thing. My friends built it, right? Like this started off as happy hours in Soho. As the stock market was crashing in 2008, 2009. That was the start of Fintwit. These were my good friends who started this whole thing. So I was just kind of like a guy there for the beers, like I didn't know what it was going to turn into, and this massive network, everybody communicating with one another and sharing ideas and learning from each other, and then the trolls. And like, I didn't know it was going to turn into this monster. I just thought it was cool. Like, oh, wow, these people care about the things that I care about, and they want to get drunk and talk about it. I could do that, Yeah. So, I'm like in my late 20s living in New York City. Like, this is fantastic. And then everybody was starting a blog because there weren't many blogs at the time. But because after the financial crisis, investors learned two things. They couldn't trust Wall Street and they couldn't trust the financial media because both missed it completely and did a terrible job of helping investors along the way. So the fact that we couldn't trust traditional financial media, and finally everybody realized that, and we couldn't trust Wall Street, and finally everyone realized that. We should have known prior, but that was the aha moment. That was the start of Fintwit. And that's when it was like, wow, we can't trust this cheesy TV channel with all their commercials and their vector vests, whatever. We have to go to this blog because this guy used to work at the Federal Reserve and this guy is the expert in that. And then that other guy, he's the expert in bonds. So anytime we need to learn about bonds, we're not going to go to this newspaper or to that TV channel. We're going to go to this guy's blog, and he's going to be writing what we need to know about bonds. And then in terms of psychology and behavior, this gal, she's the best in the business. And these buffoons on this TV, they don't even know she exists. And she's sharing all this priceless information on her blog. Yep. And then those turn into podcasts and then YouTube videos. And that was really, and it just became a spider web effect from there. So rather than going to some generalized, old-fashioned media outlet, we started going directly to the source. And not just me, I mean, everybody obviously started going directly to the source. And that inspired others. Be like, wow, this guy's an expert in this, and he's getting all this traffic, and he's meeting all these people and benefiting. I'm an expert in that. I'm going to start writing about that, right? Some were financial advisors, and they write about the financial advisor industry. Some are venture capitalists and investors in fintech. So that's what they write about. So for me, I was a technical analyst, right? I was already a CMT at the time. I completed that in 2008, in the summer of 2008. Talk about perfect timing. And then my friends were like, JC, why don't you have a blog? I'm like, I don't know. Why don't I have a blog? And I don't even know how to build that. Like, what is that? And they're like, oh, we'll just build it for you. Don't worry about it. We do it all the time. I'm like, okay. So next thing I know, they give me a username and a password. They're like, go. And that was 10 years ago. That was pretty cool.
Yeah, for sure. It's really interesting to hear all these different stories that you've got, JC. Like, I didn't realize the library that I was walking into here. I feel like we need to make a part 2 on this, JC. I feel like we've only scratched the surface here. So JC, let's leave the audience with
this one time it was like 3 a.m. and I'm stumbling down Times Square. No.
You know what? We need a story time with JC is what it sounds like. Every Thursday from now on, story time with JC. No, but really, this has been a lot to unpack. And before we go, I think we should give the audience something tangible, something takeaway, right? You mentioned earlier on, right as we started, about how price really is the best indicator, right? And I totally agree with that. I am personally one who I really like to follow like maybe 1 or 2 exponential moving averages, and I try and keep things clean and simple. And if it's going up and it's above, let's say like the 15-day exponential moving average, and I'm selling put spreads behind it, I'm just going to let it run and let it do its thing. And I mean, I boil it down to my trading is as simple as that. How would you boil your trading down to?
For me, it's a weight of the evidence approach. By the time I decide that we want to buy Abbott Labs, 95% of the reason we're buying Abbott Labs has nothing to do with the chart of Abbott Labs.
Really?
Right? It has to do with the other 5,000 charts that I looked at that week. Right? So when you're asking me, hey, JC, what do you think about Microsoft? The first thing I'm going to do is I'm going to tell you what every stock market in the world is doing. Everything from Canada and Australia and Europe and Japan and Singapore to the emerging markets from Pakistan to Brazil and Russia and India. We're going to go over every index because when we look at stocks, we don't just look at American stocks. We look at stocks as an asset class. Then I'm going to do the same thing for every futures contract in the world, and not just crude oil, gold, natural gas, and silver, but corn, soybeans, wheat, cardamom futures in India, palm oil futures in Malaysia. If there's a contract, it's on our radar. And we're going to do the same thing with probably the top 60 currency crosses in the world, everything from euro, yen, Aussie to Naki-Saki and everything in between. And then we're going to do the same thing for the interest rate markets in about 25 to 30 of the largest, most important markets in the world. Then, and also all of the intermarket relationships between all of those asset classes. And it's not until after we've done all those things that we'll come to the United States and we'll start at the index level. We're looking at the Dow, S&P, NASDAQ, Russell, all of the ones that you know, but also the Value Line Index, the IPO Index, the Momentum Index, all of these other, the Value Line stuff, all these, the Wilshire 5000, the S&P 1500, pretty much every index that exists in America. Then we're going to go through every sector. So utilities, financials, energy, technology, communications, discretionaries, all 11 or 12 of them, however many it is now, materials. And then when you look at the sector, you're also going to break it down to the industry level. So in other words, when we're looking at energy, what about what's in energy? Oil services, refining stocks, explorers and producers. When we talk about financials, sure, you have financials as a sector, but underneath that, you have the insurance stocks, you've got broker dealers, you've got the regional banks, you've got the managed asset companies, right? When you look at healthcare, you've got pharma, you've got biotechnology, you've got medical equipment, right? You have vastly different types of industries within a sector. And then and only then do we look at the components of a particular industry group. So by the time we say we like Abbott Labs, it's probably because we like stocks as an asset class, we like US stocks, we like healthcare. Within that, we like medical devices. And it just so happens that Abbott Labs, ABT, presents the best risk versus reward opportunity to express that given thesis in the marketplace. So by the time we say ABT is our favorite buy, I'm not saying it is right now, but it has in the past, of course. Again, most of that, 95% of that has to do nothing with the actual chart of Abbott Labs.
Wow. That is really interesting. And that's like the opposite of the way I trade. And you know what's great about that is that you and I both arrive to the same place eventually. And we do it in our own means to give us the most confidence in the trades that we're putting on. And I find that fascinating, right? Like, That's so interesting. And honestly, that may be some of the stuff that I need to start integrating in my trading, is looking at more broader picture, especially since you're talking about going worldwide and everything else too. So I thought, wow, that's really, really cool. Thank you for going through all of the, like you said, quote, 5,000 other charts to get to the one before we decide to buy it there. Really, really cool.
I've written a short guide on how you can use the triple stock profit system. It's the secret weapon every investor needs right now to change your financial future. And you can get it for free by visiting triplestockprofits.com or in the links below. Also, if you want to join a community of traders just like you can get free access to the Elite membership that has even more resources to help you trade faster and trade smarter.
All right. Well, JC, let me tell you, I really appreciate this conversation, and I feel like there's a lot more that we could pull out of you. So I want to schedule a follow-up show with you. We'll do that offline, but I really appreciate your time, because this was good, man. That's why I love having people on. There's so much to learn out there, not just learn, but all these stories to hear, and these stories can translate into lessons, and I think that's really key and critical, and one of the reasons I love having guests on. So thank you, JC, for your time.
Happy to do it, man.
Hey, and good luck with your next employees there. It sounds like you got a full house coming in. They don't even know.
Don't even know yet. They don't even know what they're getting themselves into.
Well, thank you again, JC, and thank you guys for tuning into today's How to Trade Stocks and Options podcast. Make sure you like, subscribe, and enable notifications. That way you never miss any of the tools, tips, and tricks that we upload every single week to help you trade faster and trade smarter. And I'll see you on the next episode.